Hi everybody, Alex Deployer from Expert Forex, and in today's video we're going to look at 7 ways to find or copy winning robot traded account settings. And this will all become a lot clearer as we go through the video, but we regularly get requests from clients that own certain robots that are traded in our linked service, and they say, please give us the set files that are used by these successful accounts. And we've had stopped doing that because set files inherently are incredibly unreliable and you cannot duplicate the results from a set file. But we are willing to show you how you can find guidelines as to which settings were used during the trading of those successful accounts, and you can use those settings as you wish. So that is what this video is about. I'm going to show you how to cheat, like you see Mr. Bean here, and find the settings used by these successful traders. Now, before we start, firstly you need to make sure that you really want to copy a particular strategy. Because if you look at Mr. Bean copying this chap next door's answers, who knows whether these answers are good? He might fail this exam and copying his results might not be good. So you've got to make sure that you are copying something that's worthwhile copying. Let's go to the link service to see how this works. Okay, and here we are on the link service web page, and let's go down to the linkable accounts. And here are the top accounts that you can link to, and there are 79 of them, all profitable accounts. And what I get, and I'll just sort this in order here, is I get a lot of requests saying, you know, this link does so well, please send me the set files, or that link does so well, please send me the set files. Now I'm going to use the analogy of teaching you to fish rather than just to feed you with fish. So that is the approach that I want to use here, because I don't like sending set files. They are inaccurate. I rather that you create your own settings from what I'm going to be showing you now. So one of the most popular accounts that people want to copy is the proprietary trading account, the FTMO 200K account. As you can see, there's a lot of followers. The most popular account. It has passed the requirements of the proprietary trading requirements. It's done more than a 10% gain, and therefore people are very interested in it. Furthermore, because it's 200,000K, you can downscale it. You can, by downscaling the lot sizing, you can go to 100,000 account, a 50,000 account, a 25,000 account, and a 10,000 account. So if you've mastered that account, you can actually do a lot of proprietary trading. So there's a lot of interest in the settings that were used in that particular account. So let's do as I've mentioned, let's make sure that you want to copy that particular account. So to do that, I'm going to click on this link, which will take us to the FXBlue analysis of that account. So here we go. So here we are on the FXBlue version of the FTMO 200K account, and here is the balance graph, and you can see it's a nice upward one. It has a few flat patches, but those flat patches actually are weekends, because the analysis is done on a calendar basis, but trading is done on a weekday basis. So you will find a lot of flat patches because every weekend there's a flat patch. Now here's the analysis of the account, and here you can see it's done a 10% return. So from a profit point of view, it's met the proprietary trading, but it's taken 72 days. You must be aware of it. It might take 80 days to get to that particular level. And the most important thing that proprietary firms look for is the drawdown statistic. And let's go and have a look at the drawdown statistics. To get there, I go into statistics, and then I go to charts, and then I go to a special chart called the floating profit and loss in cash on an hourly basis. In other words, it takes into account all the open trades, the balance of the open trades on an hourly basis. So it's pretty accurate to tell you what the drawdowns have been. So I'll click on that, and there we are. We've got the floating profit and loss on an hourly basis, and here are the numbers, and you can see that this account went just over the 6,000 mark at some stage, came to 5,000 there, and very close to the 6,000 mark here. But if you take 5% of $200,000, that's $10,000. So as you can see, at most, the drawdown was just over 3%, most probably 3.3%. So this account qualifies for the type of performance you want when trading proprietary accounts. So now that answers the question, is this an account that I want to copy? Also, let's just quickly look at the trade frequency. It says, okay, there are 4.3 trades a day. So we're happy that this is an active account. It has a low drawdown and has the profitability that we need in prop trading. Now, although it's taken 80 days to make that 10%, remember you get 80% of the gains, which is 80% of 20,000 is $16,000. So it's worth the wait. $16,000, a lot of money to make on an automated basis trading a robot like this. So the next point I'd like to make you aware of is you need to know the limitations of copying settings. It is very, very unlikely that you will be able to replicate the exact results achieved by a trader by using that trader's setting. So you must therefore personally test any settings and improve on them on an ongoing basis. And we actually tell you exactly what to do on the marketing page. If you are not achieving the results that you would like, we give you exactly the adjustments that you make. So that's not too much of a problem. But you must realize that if you take settings that another trader has used to be successful and you plug it into your account, you are not going to generate the same results or possibly even the same trades as that particular trader. And there are many reasons for that, and I'm not going to go into that. I have personally made lots and lots of videos explaining why set files don't work. But the biggest one in this case is that the account that you're trying to copy is an ongoing account, and you're going to be starting at a random time. Let's say on a Monday morning, the account you're copying is going to have open trades and all kinds of other things which affect all the future trades. So it might miss trades because it's already got a whole lot of open trades, and you on the Monday might pick up trades that the other account doesn't. And so from then on, you'll be completely out of sync. So there are also other technical reasons why it is very unlikely that you will be able to replicate the examples. So people put a lot of faith into these settings that is most probably ill-founded. You still need to do a bit of work to make these settings have any value. Knowing these settings is a good starting point. So let's go and find out how we can go about it. Now, there's no shortcut to this. You need to know your EA or your robot that you're trading. You can't just blindly buy a robot and say, okay, I'm going to stick this random set file into this robot and I'm going to make money from then on. You need to know how the robot works, what kind of signals it takes, how it responds to settings and that type of thing. So here on your screen, you can see the settings for the Wave Forex Liberator, which is the one that you can use to copy, which is the one that represents the trading of this proprietary account. Now, I have highlighted the most important settings. The other settings are not that important, and therefore you don't have to have all these settings perfectly in place. What you need to know is that these settings do not have to be perfect to produce really good results. So I'm just going to go through the kind of settings that we're going to look for when we analyze this account. So the direction of trade is important. You can either reverse the direction of trade or you can trade in the same direction. We'll be looking at that. The look back period, it's 70 bars. We'll be looking at that. The price gap, how big is the price gap that is used for this particular strategy. I'll show you how to find out what the account is using, what are the initial lot sizing, and that will be very easy to find. What is the top-up multiplier? Again, that will be easy to find, and I'll show you that. Top-up trades to skip, the default is 0, and in this particular example it most probably will be 0.2, and then it says what is your initial profit, and we'll show you how to find that. And then how are you going to close baskets of trades that have gone negative but have recovered their profits? How are you going to close them? Are you going to close them on a dollar amount or on a pip amount? And I'll show you how to find that out. And then here's the next important one, is which currencies are you going to trade? And there's a list of currencies. These are the default settings, but we're going to find the actual currencies traded by these winning accounts. So you need to know which settings are important, which ones aren't important, and focus on the important setting. And I'm going to show you how to find those important settings. So what we're going to be looking for, the information that we're going to look for, is which currencies are traded, which time frame is traded, which direction is traded, which gap size is traded, what multiplier strategy is being used, what the initial lot sizing is, what the lot sizing strategy is that is used, and what take profit is there is for successful trades, and what is the closure amount for unsuccessful trades. Now those are the key and most important settings to get right. Once you've got that 90%, you can then say, okay, I'm going to use these settings for my prop trading, but you need to then still do a bit of testing to make sure that these agree with your particular prop trading account. So let me show you how you find these particular items. And here we are back at the FXBlue account, the analysis of this particular account that we want to find the settings for. And let's start finding all that information that we need. Firstly, which currencies are traded. So here we are, we've got a direct list of all the currencies that have been traded. You can see quite evenly traded. There are 10 currencies that have been traded. If you want to have an analysis of those currencies, you click on analysis, and there you can see analysis. You can see which ones are the most profitable at the bottom there, and which ones are the produce less profit, which ones are the most successful from a success rate point of view, and so on. So we found it easy to determine which currencies were traded. Okay, so finding the currencies was easy, but some of the other settings might require a lot of detective work. So we might all have to turn into Sherlock Holmes and use the clues that are given in the history of the EA. So the next one is going to be which time frame was used for this trading. Now there's two ways of doing it. You can look at orders, you can look at the open orders, and hopefully that will be enough to see that. If you can't do that, we'll look at the closed orders. But essentially you also need to know how the EA trades. So the EA opens an initial trade, and if that initial trade goes wrong, it opens subsequent trades. So the first thing to do is find out what the initial trade is. And just looking at this, here's a currency that has only one trade. So we know that that is the initial trade, and it traded 0.9 lots for that initial trade of that one. So now we want to find out what time frame is being traded. Now there are basically three choices. There's the hour, the 30-minute, and the 15-minute. So let's go and have a look at when this trade was opened. So we go along, there's the open date, but we're not interested in the open date. We're interested in where it was opened. And it was opened 15 minutes past midnight. That is midnight, and it was opened 15 minutes later. Because it was opened 15 minutes later, we know for sure that it is using the 15-minute time frame. So let's double check it. Let's go and find the initial trade for this particular one, and that's the euro pound. And let's go and have a look. And this one was opened 15 minutes past 3 o'clock. So again, there's a confirmation that the 15-minute time frame has been used. So we can immediately jot down the 15-minute time frame. Now, if there are no open trades or only one or two, you can also look at the closed orders, and I like sorting them in open date. So this is the 2nd of the 10th, which is quite recent. There again, we found that there is one transaction floating around which has been closed at 0.90. Again, I look across and then I see that it's 15 minutes past 2. So you can use the closed transactions to also determine which time frame was used. And the next one over there, you can see 45 minutes past 8. So that's another. Now remember, this is only used for the initial one, because you can see the subsequent ones are odd times, because they are opened not on the close of a candle, but on them reaching a certain price level or grid level. And also be careful if the 50-minute can also open on a round number, so just be careful. You need to read about 5 or 6 examples to make sure that you are picking up the correct time frame. So as I said, this requires a bit of detective work. Now the next one, okay, so we've done the currencies, we've done the time frames traded. Let's have a look. Now we're looking at direction. Now again, direction is a tricky one. You need to know how the EA trades and which entry signals it uses. So the only way that I do that is I reconstruct some of the trades. So as you can see, some of the history gives you exactly the entry one, and then the subsequent one, and the one after that, and the one after that, and therefore you can reconstruct trades using that information. There's the time, there's the prices that the transactions happened, and you can just take a small sample like that sample and reconstruct how these entries were made. So looking at those two New Zealand entries, there's the initial one, there's the subsequent one. You can see that the opening price was 0.59795. The next price was 0.59945. So it is a bigger number than the opening price. So therefore, you know that the direction was up. So the price increased for those two transactions to happen. So that's one of the ways that you find the direction. You need to determine the direction in relation to the strategy used. So what I do is I reconstruct transactions, and I'm going to show you a chart where I have reconstructed the transaction, and here is a chart. And if you know the wave liberator, you'll know that the wave liberator enters trades on new lows or new highs. And here's an example where sell was entered on the creation of a new low, and then the price went in the wrong direction for the trader, and the trader opened a subsequent trade. So we know that the strategy used here is a breakout strategy in the direction of the trend on new lows, and it doesn't tell us whether it's new highs, but we're only analyzing one trade. So we immediately know that the direction is in the same direction as the trend. If it was a bounce transaction, the EA would be opening a buy transaction there and would be trading against the trend. And that is the setting that there is. Are you trading in the same direction, or are you trading in the opposite direction? So now we've determined that this EA uses the same direction. And this is the setting that we're looking at, direction of initial trade. So it isn't the reverse transaction, it is actually in the same direction. So we've done that setting, and we've done the markets to trade setting. And in fact, the other setting that we've done is the initial trade entry, because we have seen that the initial trade entry is 0.9. So we've actually done that setting too. So slowly we piecing together the settings that go into the trading. So let's have a look at some other settings that we could look at. Okay, so we now know the direction of trade. Now we're going to look at the gap size and the multiplier strategy and the initial lot sizing. Now, as I said, we've already done the initial lot sizing, and that is 0.09, but we will look at the gap size and the multiplier strategy right now. And to do that, in this case, I can actually use the open orders, because that's got enough history for me to go by, and I'm going to just sort it in symbol order so that the same symbols are together. Okay, so we're going to look at the gap size strategy. Now, in order to do that, you need to look at the initial one, the initial trade, and then the subsequent trade. Now, the subsequent trade in this case was that one that traded one lot. So it goes 0.91, and then it goes bigger and bigger. So that answers another question that we have, but let's first focus on this. So the difference between that number and that number will give us approximately what the gap size is. So let's have a look at that. 37 less that is 15 pips. So then we do the next one, the difference between that one and that entry. Difference is 22 minus 6, that's 16 pips. So far we've got 15 pips, we've got 16 pips. Then we look at the next one, which is plus 8 minus 6, so that's roughly 14. This is roughly 14 pips, but this is still an open trade, so we can't really rely on that one. But we know that the gap size is between 15 pips and 16 pips. So we can basically say we have found the gap size that exists. Now what we can do is just go to closed orders and see if we can determine something similar there. So there's a closed order. We have minus 9 and we have plus 6, so you add the two together, that gives you 15. So 15 seems to be a good number. If we then go to the next trade there, 21 minus 6 is 15. So 15 seems to be the number that we can write down. That is the gap size used by this strategy. So we're doing really well because we are determining a lot of these settings. Okay, so the next setting we're going to look at is the multiplier strategy. Now the multiplier strategy says how much are you going to increase your lots as trading goes on. And here we can see that it started at 0.9, then it went to 1, then it went to 1.11. Now that is an immediate clue. If you're moving from 1 to 0.11, then it means that the multiplier strategy is actually 1.11. Let's take this one, then you can see again the initial trade. There's the one, and I think that closed the deal, so that doesn't count. That was, those ones don't count. Let's see if we can find another one that shows that. And unfortunately these are not sequential. Sometimes it's easier to see it in the open trades. Let's go and have a look at that. Here's the open trade. So there's 0.9, then 1, then 1.1. So that, now we've confirmed it in two ways using the open trades, and also the closed trades, that the multiplier is in fact 1.11. Okay, so we're actually doing pretty well. We've found out a whole lot of settings that are on our list. So let's have a look at the take profit number. So, and to do that, we definitely need to look at the closed orders. And the best one to do there is to actually find a successful, a green 0.09, because that means that the initial trade was successful. So we just go down the list. So far we haven't found any one. Nothing there, nothing there, nothing there. Oh, looks like this is going to be a long successful trade that we can. And let's keep, oh, there's one. Okay, that's most probably the most realistic one. That is 0.9, and that is 25 pips. So let's see if we, and there we've got another one, 24 pips. So 25 pips. So you go for the biggest initial trade positive result that you can find, and there we have it, 25 and 24. So I would say that the take profit in this strategy is 25 pips. We do, however, have to add the spread. So to be conservative, I would say that the take profit in this particular case is 26 pips. So now we determined that the take profit is 26 pips. So by a process of doing detective work, we are finding the settings for our EA. Now the tricky one is the closure amount. Now this one is a lot more tricky because there are two settings for the closure amount. Let's go and have a look at those settings. All right, so let's have a look at the market closure method. So there's two methods that can be used. You can close it by a dollar amount, or you can close it by a pip amount. So in other words, once your basket of open trades is up by, let's say, 7 pips, it will close. Or if you put, let's say, $20 in there, once your basket of open trades is up by $20, then close all the deals. So let's go and have a look at that. And this is going to be tricky. I'm going to have to do a lot of sums, but let's do our best. Now, in order to do that, I go to the closed orders, and I also look at the most recent trades. Don't look at the first trades, look at the most recent trade, because a trader can actually trade the strategy, change the strategy from the initial start to now. So you always use the most recent trades, and then we try and find a basket of trades that close together. So and to do that, what you do is you find closing times that are the same. Now let me see if I can make this easier by sorting it in close dates. All right, now we're getting better. Okay, so here are some baskets of trades that close together. And what I'm going to do, and there's a very big basket, and there's another one, and there's another one. So we've got plenty of baskets here. I don't want to spend too much time on this, but let's have a look at smaller baskets therefore. So I would prefer baskets that are bigger than 3. So let's have a look. So there, that's too big, that's too small, that's too big, that's too small. There's one of 3. Okay, so they're all closed at the same time. So let's go and look at what the dollar effect was and what the pip effect was. So what we need to do is add those 3 together. So I'm going to just do this on my calculator, literally on my calculator. So it's those 3 together. I'm going to start here, 274 plus 68 above it, and then less 101, and I get to a figure of $241. Then I add the pips up. So the pips, I can do it mentally. That's 20 pips. That's 27 pips. 27 less 9, that's virtually 9, is 18. So there are 18 pips when the closure happened. They were 18 pips up, or 241. So now what I do is I find another batch of currency, of closures that, and this time I'm going to see if I can find a one with 4 closures, and we keep on going down and can't really find one, so we'll go to the next page and we'll look for closures that have roughly 4. There's a 4, 12, 12, 12. So they all closed at the same time, and therefore I need to add those 4 figures up to get to a dollar amount. So what I'm going to do is just that. I'm going to start with 133 plus 334, and now I'm minus 162 minus 29. Right, so I come to 276 in dollar terms, and then let's have a look at what happens if I add the pips together. So I'll start with 12.5 plus 27.6, and then minus 17.6 minus 2.5. Okay, I get to 20. So far it's not conclusive. So I'll actually publish a slide with those numbers on, and what we need to now do is find a bigger one. Maybe I'll use one that has 5. So here's a group that are 5 there. You can see those have closed all together in a group of 5, and I'm going to add those 5 numbers up and those 5 numbers up and see what we come to. So I'm going to start here, 253 plus 506 plus 44 minus 251 minus the last one, which is 127, and we get a completely different number to the one we had before. This adds up to 425. Now let's have a look at the pip values. So we start again at the bottom one, which is over there, and we go and 18.8 plus 33.8 plus 3.9 less 25.8 less 25.8 less 11.1, and that comes to 19.6. So what we saying, and I'll just put those figures up so that we can discuss them. Okay, and so here are the numbers that I've just gone through. The first trades gave that result, 18 pips and 241. Then the next one gave that amount, 276 and 20 pips, and then this one was clearly completely different, 425, but the pips stayed constant at around 20. So I think from the small sample that we've done, and what I could do is another one to just confirm this, but it looks like the dollar was not used, but pips were used, and the pip setting is 20. Now, just to remind you, so the market, the target closure was probably not used, so that was most probably 0, and the pip setting was 20. So we really have determined most of the most important settings. We've got the target amount, so you could either use the hidden target, or you could use the take profit without a hidden target, but that we've determined to be 25. Top-up trades to skip. We've seen that no skips were applied because our transactions just followed in logical order. So that 0 is correct. That one is 1.11. The initial trade was 0.9. The gap size was, off the top of my head, I think it was 15 pips. And the lookout bars, now that is a difficult one to determine. It is not a critical one, but what I have found is that 70 is the default and 70 is most probably the one that was used. So that's an uncertain one. We'd have to assume the default, and the direction was the same direction. So we've actually found all the critical settings. These other settings are not critical, and you can actually use the defaults for the ones we haven't done. We did, however, not determine the trailing stop, and the default here again is 20 and it will trail by 10 with steps of 5. Again, when in doubt, just use the defaults and that will be fine. And that in fact is on the next slide. Missing information, use the defaults when in doubt. So that's exactly what I said. And then once you've got all of those settings, test the settings on demo accounts to see how close you can come to generating the same information as the initial trading strategy that you have copied, and you'll be surprised how close those will be. So just use demo accounts. You'll see immediately if your gaps are too small or too big, or your targets are too big. You'll see that on a demo. So you need to test for about a week. Test all the identical trades taken by the account that you're trying to copy and the settings that you found, and it will tell you where you may be slightly out, but you should be able to get within 90% to 100% of those settings. Now I hope you've enjoyed this video, and I hope I've given you lots of ideas on how to find settings by analyzing the successful trades in our Link to Success linking service. Now you will get better and better at this the more you do it. So with practice you will come perfection. So the more you do this, the better you'll get. Don't expect to be perfect the first time around, but by doing this and demo trading the accounts for 1 week, you can start matching the trades pretty closely, and the more you do it, the more closely you'll be able to match the trades. So if you own any of the EAs that are used in our linking service, you are now in a position to find the trading strategies used by those successful robot traders. So from me, Alex Deploy, cheerio.